Hello and welcome to LiveSquawk's Market Talk on Thursday, 24th of July, 2025. On today's episode, we'll be previewing the ECB Interest Rate Announcement due at 12:15 GMT, 7:15 Eastern Summertime. Just to give you a quick outline of what is expected, an economist poll predicted the bank will leave its main interest rate unchanged, which would keep the deposit rate at 2% and the main refinancing rate at 2.15%. The bank's 25 basis point reduction at its last meeting in early June represented its seventh straight rate cut. With me today, I have Gunter Grimm, speaking in his own capacity as a market analyst, and Eric Culp, LiveSquawk's Frankfurt and European economist. Hello and welcome, guys.
Greetings from sunny Frankfurt.
Well, hello,
is it sunny?
Well, it's partly sunny.
Gunter, where are you speaking from?
I'm speaking from Zurich. It's raining, unfortunately.
Oh man, well, I've got the middle ground then because it has rained and it's now cloudy and it's very humid. So now the weather report's out of the way, we can get on with. Actually, before I do that, just a quick disclaimer here, as always, which is the boring stuff. The content provided on this channel is for informational and educational purposes only. We're not licensed financial advisors, and none of the information shared should be considered as financial investment or trading advice. Please conduct your own research, consider your financial objectives, and consult a qualified financial professional before making any investment decisions. Investing and trading in financial markets carries risks, and past performance is not indicative of future results. We are not responsible for any losses or gains that may result from following the content on this channel. And we shall move swiftly on then. Anyone wanting to have a look at what is expected, we have a preview piece at LiveSquawk.com. Eric Culp wrote this. It's out there. It's free to air for anyone who wants to pick it up and read. It's entitled 3, 2, 1. It's titled ECB set to end cut streak at 7 amid US trade threat and stronger euro. So please go and find that either on the social media or on the LiveSquawk.com website. I want to give you a little bit of a overview from one of the banks that we follow and we look at. Barclays predicted the ECB will leave policy unchanged, maintaining the deposit facility rate at 2%. They said, we believe the Governing Council will refrain from offering explicit guidance on the future policy path and instead keep its options open for September meeting. This view reflects the fact that incoming data has broadly evolved in line with the June baseline projections, and that the diversity of opinions within the Governing Council range from those who see the bar for further easing as very high to those more open to additional accommodations, suggests that the path of least resistance is to wait for the September forecast update and potentially greater clarity on the trade policy landscape before adjusting policy itself. Eric, I'll give you the lead on this one because you've obviously written the preview for it. What are your initial views and how have you framed this month's decision?
Yeah, I think it's pretty clear that there'll be a hold. There's a lot going on right now. Again, as stated in Barclays research, the inflation rate is right where they want it. It's at 2%, or it was in June, which is the ECB's medium-term target. So no need to change because of that. Hard to say. Q2 numbers are coming next week. There's growth concerns remain in Germany. That is the second-tier writ of the ECB to ensure that growth in Europe is strong. But the first is, of course, is inflation. The other problem, of course, is the trade issue. There's a really high noise to information ratio coming out of Washington. You don't really know what's happening. Even the Japanese deal for 15%, which there's talk that that'll be the EU deal also, instead of 30% like Trump has threatened. There's not a lot of detail there, right? So it's really hard to tell what exactly these deals will be. I think the bank also wants to reserve a cut in case it gets ugly quickly, which could happen, and then they can say, okay, well, at least we can try to support growth with another cut, and bang, in September, bring it on.
So we can they keep some bullets in the barrel, really, just to try and offset potentially what may happen with the trade discussions?
I think that's it. Yeah, and they don't want to fire too early, right? Everybody knows that if they don't change today, if they don't lower today, they have that, in their back pocket or in the chamber, if you will, and then they can go with that depending on what happens. Next week. Next Friday is the deadline, and there's still a lot of different reports about how Brussels is going to respond. But the latest ones say they're going to accept a 15% slap.
Yeah, that's what we were hearing. I mean, there is a delegation that's heading to Washington, I believe, or is it New York? But they're heading stateside to talk with the White House administration. So it'd be interesting to see what comes out. Obviously, lots of speculation around that anyway. But yeah, I'm hearing the same about that 15% on EU goods and nothing in return. So we'll wait and see. Gunther, do you have any viewpoints on? I hope so, because that's what we got you on. Any viewpoints on today's decision? And we'll have a look at the wider trade situation and everything else.
Sure. Yeah, I broadly agree with Eric. I think it's too early to tell. There are too many uncertainties. So on the tariff front, which Eric mentioned, that's a big uncertainty. I wonder, though, if maybe the Japanese deal template is the best case scenario for the Eurozone, and I would not be surprised if they get a worse deal. Why? I think Trump or the United States need Japan in Asia, given the problems with China in that region. And in Europe, I think he wants to leave the Europeans on their own devices. And he has, I think, the feeling that he doesn't need Europe that much. And also, I think the Europeans have, in quotation marks, cheated the Americans even more than maybe the Japanese. So I think he doesn't like the Europeans. That's what I'm trying to say. So best case scenario is they also get a 15% deal. I guess then we see a bit more risk on. Of course, the other worst case scenario would be, let's say, a 20% deal, and then I think we could see risk off. What would it mean then for the ECB? I think 15%. Then I'm not sure if they cut again so quickly in September. Interesting enough, 24 of 29 analysts expect a cut in September, whereas only 11 basis points are currently priced into the STIR curve, according to MNI. So that's an interesting observation. On the plus side, why they should not cut maybe is German fiscal policy. And Morgan Stanley came out with a note mentioning that the German government has published their recent deficit projections, and they are well above the Bundesbank's assumptions. So net, there's more fiscal stimulus coming potentially, which would be a plus for the Eurozone growth, and maybe therefore lessens the need for the ECB to cut rates further.
Understood. What I'm trying to do is pull up your. Can you share your? Let me see if I can see on my screen, and let me see if I can do this first, and then we can take it from there. Oh, cool! You got your one. Brilliant. We'll do that.
Yeah.
Here we go. There we go. There we are. So yes, in terms of the no change expected today, it's pretty much across the board. But you say we're now looking down the line and trying to maybe second guess the EU trade deal itself, pretty much. Do you have any kind of from your presentation? Do you have anything that just gives us some sort of view of what the rate expectations are likely to be as we move down to the back end of the year?
Yeah, so I digged out a research note from Goldman's. I think they're very thorough, and they always look into the ECB's technical assumptions and then look at the variables the ECB is using, mainly the euro, the yield, and then oil or energy prices in general, and try to come up with how the ECB staff might change their projections. And so they see a bit, so the euro has strengthened a bit, so that should subtract from inflation and growth. But energy prices, especially gas prices, only have risen a bit. So further out, so short term, they expect headline lower,
Right.
and then a little rebound. I also looked at research papers, and they come up with similar assumptions. So let's say 1% appreciation of the euro in trade rate terms has 0.1 to 1.2%. Here we have the table. 0.1%. So in this case, they're looking at a depreciation. In our case, we're looking at an appreciation. So you have to put a minus in front of these numbers. So 1% stronger euro means 0.1% lower HSPI in 1 year, and then maybe 3 years later, 0.2. And these assumptions here vary among various models and papers are, there's an outlier similar, I'd say. So let's call it 0.1, 0.2 in 1 year, and then 0.2, 0.3 in 3 years, maybe.
Okay. How much is the currency? I mean, I know, Eric, I think it was something that was being discussed, the strength of the euro at the moment against the dollar, although the dollar situation, I guess, is pretty much a widespread phenomenon at the moment, and it's lost ground against the basket of currencies. But will the ECB, have you heard anything, Eric, within your research about the ECB maybe paying some attention to the currency at the moment and the effects that might have?
Sure. Earlier, the Vice President, Luis de Guindos, he said that 120 would be much more complicated. That's his quote.
Right.
I mean, it sounds like that's the pain point. Anything above 120, and how is the bank going to react? I mean, they haven't discussed that. It's hard to say what they could do, and would that only inflame the issues with the United States if there's any kind of currency intervention? Because that's one of President Trump's pet peeves, that people are manipulating currency. Whether it's true or not is a different issue, but I don't know really what they could do. I guess I don't know enough about currency, but
we'll bring in someone who might have a clue about currency and stuff. Any opinion on the currency and how it might come into play?
Sure. Eric is right. Intervention is in theory a possibility. I highly doubt it they will do that. SMB, by the way, the Swiss National Bank, is also in a corner, I think. So at the moment, I think it's more dollar driven. So the dollar is weakening across the board. And so the numbers are coming a bit softer in the US, and Trump is, of course, putting a lot of pressure on the Fed. And I think that confuses a lot of people, or makes investors who are long dollars from a long-term perspective, makes them nervous. Short-term, maybe the specs are probably short the dollar. So we might see little rallies in the dollar, short squeezes. But long-term, I think the dollar is still under pressure. So that remains my view. And I think we've talked about that in the past. And I don't think the ECB can do much about it apart from maybe lowering rates a bit further than maybe currently priced in. Say, if the euro appreciation also goes very quickly, I think then they would get even more nervous. But if it's a slow, steady approach and they acknowledge that there's not much they can do about it because it's a dollar story rather than a euro story, and if the dollar weakens across the board, which I think we are witnessing at the moment, then I think they throw the towel and maybe then don't sound hawkish or rather dovish, try to manage short rate expectations a bit lower. But will that do the trick? I don't know. In a weak dollar environment where Trump really wants a weak dollar to rebalance the economy, to reduce trade deficits, I doubt it.
Yeah, I mean, I do. There is. Analysts have said there will be questions unavoidably about the currency, but most analysts expect the central bank to give the usual response, which is they don't target the currency, and they'll leave it at that, and they'll try and swerve that kind of question. But it's an unavoidable issue at the moment for the central bank. I'm trying to move again. I don't want to beat a dead horse here, but in terms of we know today's decision is a done deal. Pricing for September at the moment. Where do we go? Where do we go with this? And could they wait and leave the door open a bit later, because we know the 1st of August is said to be the deadline, but they've moved deadlines before, and the uncertainty will only ratchet up at the time. Is there any point that the ECB just goes, look, we have to take this in hand and just ensure that we're creating a buffer for any sort of trade uncertainty that's coming?
I think yes. They say they're data driven, and I think that makes complete sense right now.
Well, yes, it does, but as you know, the markets will. If you leave a vacuum, the markets will then find their own path and come to their own conclusions. So it'd be interesting to see how Lagarde really manages expectations down the line, I guess.
Yeah.
Any views on that?
Yeah, I hate to sound like an economist, like on the one hand, on the other hand, but we really have to wait for the outcome of this trade deal between the EU and the US, I'm afraid. And I'm not in a position to know what the outcome will be. It's just guessing, and therefore I step aside, take the result as it is, and then try to act on it instead of front running this and then get rolled over, maybe potentially.
So if we look at it from a trade perspective, then for many of our listeners who trade and whatever, this is a month where you sit on your hands, you watch the decision go by, and then you assess how the market's reacted or how the market's forming on the back of that, basically.
My feeling is the market has now anticipated a positive outcome for these trade negotiations between the EU and the US. So being more negative could actually be a bit of a setback. But then you have the fiscal stimulus story in Germany, which seems to be like a cushion. So whenever you think the DAX goes down, then also quickly recovers. So the German stock market. So I think the underlying story there is fiscal stimulus there.
Well, let's talk about that. Sorry, go on, Eric. You were saying.
Yeah, I think there's a number of factors here. You're dead right about the trade issue. That is leading everything right now, because that's going to affect economies, especially Germany and Italy. Their car industries are highly dependent on the United States. Also, you have to consider, it looks like the rotation out of dollar-denominated assets into euro. And I mean, I know that Christine Lagarde has talked about this, and other leaders in Europe are talking about it. And then again, the German stimulus plan. These three factors, they play a big role. And I think it's hard for officials at the European Central Bank to see where this is all going, right? I think the wait and see attitude is important to them. But I also think that Lagarde, during her comments today, may hint at what they were thinking about the trade deal that is less than optimal. They're all less than optimal. But if it's a lot worse than they expect, she might hint at it. She's known for going outside of what the bank has said on forward guidance, right? Now, whether or not that's
going rogue.
Well, yeah, see, that's the question. I'm actually wondering now if, because she does it so often, is it intentional? And among the governing council, they say, yeah, you know what? We're going to say this, but then we're going to do that.
Right. Well, interesting point, and we'll have to wait and see to find out what's happening there. Just in terms of any sort of side issues, then, and whether she's going to get the whole council on side or not, are there any murmurings of within the governing council of a division or any kind of different direction that some of the board members want to go down, Eric?
I think everybody's a spectator right now. I mean,
Right, okay.
there's just way too much going on between, how does Europe arm Ukraine and how the trade deal is going to affect the European Union and the Eurozone. And there's a lot going on. And I think for them to make any decisions on monetary policy, that they want more information. Q2 data coming next week, July inflation data coming next week. And then the next meeting is September. So there's a long stretch to look at data.
Gunther, I've seen on one of your slides here, you got ECB US tariff policy base case scenario. Is there a range in your eyes for what's a good deal and what's a bad deal, and again the sweet spot in between rather? So you mentioned 15% would be not ideal, but potentially where we go.
Correct.
What's a bad deal in the EU's case?
I would say 20 plus, but it's really just more gut feeling the way the market trades. I mean, 30 would be a complete disaster. Basically, then you're halting trade. I think it's too prohibitive. Closer to 20, maybe there's a short-term setback in the markets, but then maybe the market also will digest it. But anything above 20, I think, is a bit of a problem.
And I know it's been said by others, but about the underpricing of the risk at the moment, and the complacency the markets have around the trade deals. Again, some of that may be a little bit misplaced, but we haven't got the finer details, as you said, about the Japan deal or many deals other than Indonesia, which is okay. So I'm not, it's Indonesia. I love them to bits. It's a great place, but they're not the fulcrum of the trading world. So we want to focus on really some of these deals, and we still haven't really got a lot of detail, even from the China deal. We know that they're in a good place, but there's very little detail on a lot of these trade deals. So potentially things can get snuck in the back door that the market might go, hang on a minute, that's really not ideal, for example. So the wait and see moment for central banks for sure, and for a lot of governments in terms of their fiscal plans and what they want to try and achieve, I suppose. Right, with that in mind, then just to quickly recap, today's decision we think is a bit of a non-event, so to speak. So it's all really about just any future guidance, any forward guidance that Lagarde potentially wants to give us. So yeah, decision comes today, 12:15 GMT, 7:15 Eastern time, and then we have the press conference. Eric, help me out because I've forgotten the time. The press conference is then at
30 minutes later.
30 minutes later, half hour later, we get the press conference from Lagarde, which lasts about 45 minutes. So this will go out just before then. Please, any questions any of you listeners have, put it out on socials to us. Eric, thank you very much.
Always a pleasure.
All right, Gunther, again, always appreciate your thoughts on matters.
Thanks a lot for having me, Harry, and thanks for your great service.
No, thank you very much. You can find us at livesquawk.com. Anyone who wants to listen in, take a trial out of the service, and we'll see you